Big shout out to Prime XBT for sponsoring today's video. If you don't know who Prime are a platform where you can not only trade crypto, but you can also trade FX, commodities, and stock indices. And the beauty of these guys is you can use crypto, either Bitcoin or USDT, as collateral to trade against these pairs. If you want to find out more about them, then check out the links down in the description. And if you do want to trade with them, then use our codes below to get up to a 7,000 USDT deposit bonus and 25% off trading fees. So thanks once again for sponsoring today's video. Good morning, gang. Good morning. Welcome to this week's Bitcoin update. First and foremost, as usual, nothing discussed today is financial advice. I'm not a financial advisor. This is just for educational purposes only, and it's my view of the market. Now that's out of the way, let's get in. It's been a fun few days. It's been a beautiful low time frame range to trade. Lots of money to be made, and price action still remains in an uptrend. So everybody's happy, which is always good. So obviously looking at the monthly, February's open now. We have had a push up. We've taken out January's highs. Zooming into the weekly, the weekly's not looking bad. Again, we've still not had a pullback to create a higher low and then looking for a higher high. So for me, we're still range bound. And then obviously looking at the daily, well, it's quite obvious to see, and I think every man and his dog now finally sees this range that we've been trading for God knows how long, but we're approaching range highs. So first and foremost, what I want to do is I want to run through a few of the trades that we've taken in the group over the past few days, because I think this is going to be really useful for you guys, especially if you're not in the private Discord group. So just basically let you inside my mind, let you understand how my thoughts worked, and basically the tier that we were looking at the time. So first and foremost, let's start on last week's video update. Last week's video update, where we're looking at this. We were saying first trade idea that we had would be quite simply a swing fairly pattern of these highs into a naked point of control, which we pointed out last week on the weekly. Swing fairly pattern, and then you had yourself a nice, continuing the low time frame range. What happened there, if we zoom out, let's zoom out to the 1 hour chart. So this was the trade, this was the high that we marked out. Quite simply, swing fairly pattern of this, and you had a nice short trigger there. In the end, we came up, we got the swing fairly pattern, and we got a nice pullback, and in the end, it was a decent pullback, 6.5%, not bad, and again, we're just continuing trading this range, and if we just throw the range fib tool on this range, again, this is what we were talking about last week in the video. All we did was took out the highs of the range, came back into the white line, which is the range lows, back into the white line, and we got a nice bounce. Okay, so we're just trading this range until it breaks, like we said last week, just ignoring all the noise and all the influences that, they're drawing the squiggles, which, let's be honest, it just keeps working against them every time. Bull flag, bear flag, whatever they call it, diamond pattern. Either way, it's not playing out very well for them, and this is the environment, patterns worked really well back in 2017 and before. But now you've got to understand more. You've got to understand more technical levels. You can't just trade from a pattern alone. If you want to know what I'm talking about, check out the free playlist, the free trading tips playlist that we've got, and we talk about patterns and why they sometimes can be good, and they sometimes can be really bad, or good if you know how to counter trade them. Again, like what we teach in the private group. Anyway, so obviously that's the first trade. So obviously going from last week's video, we said swing fairly pattern, we get the short. Got the swing fairly pattern, we got the short. Nice and easy, right? So that's the first one. So the second trade that we're going to talk about is based on, let's have a see, which is this one here. So this is going back to the 31st. So this is the last day of January, so this is now 2 days ago. And this is what we were looking at. Is this here, and this is something, if we look at this screenshot again, sorry, I'll bring it back up. I've just removed it. That's not what I wanted to do. What I was saying in the Discord is, if I just get a quick screenshot of this, we can see it again, since I removed it, is everyone was watching this previous day point of control at the time, and I even made a joke about it on Twitter, saying it's the strongest previous day point of control you've ever seen in your life. And then what happened in the end, we can see here, this is what we were talking about at the time, and price just kept rejecting off this point of control. Now, to me, this previous day point of control wasn't a strong level. It was a naked point of control, but it wasn't the strongest level. What I was more interested in is coming up and coming back into this monthly SR level that we've got, grabbing some of the stops here, a little bit of the liquidity, thus in turn grabbing the liquidity above there, and then you had another nice short trigger. So what happened in the end, we came up into this zone that we'd marked out, and we got a nice rejection. And in the end, again, another nice scalp trade. You know, it's another 2.5%. You know, depending on what you're trading with and your leverage levels, you know, it's a decent trade. You know, a scalp within the low time frame range. You know, these levels have been respected really, really well at the moment. So obviously that's another trade that we took, and that was the reasoning behind it. When you can see the liquidity and you understand that we could see in the time, because we could see it on order flow, is every man and his dog were shorting this level. Which, if everybody's shorting that level, what does that mean? Well, it's quite simple. If you're shorting that level, then where are you going to put your stop loss? Well, you're going to put your stop loss just above the swing highs. Or you're going to use these swing highs. So you're going to put your stop loss there. So we can see this is on the 1 hour chart. We spent 1, 2, 3, 4, 5, 6, 7, 8 hours below that level. How many stop losses do you think would be accumulating in this level while everyone was shorting it? Bear in mind the psychology of most people as well. We are towards range lows. Everybody's wanting to come back down towards 20k to fill that CME gap. You know, you've got angry bulls that are angry bears, depending on your preference, that want these lower prices because they're angry that they missed out on this entire move up. You know, so they want to short this down rather than just remaining perfectly neutral and waiting for a good opportunity. Like, for example, the current range lows, they're angry, so they're shorting. So they're shorting against this, and then lo and behold, the next hour comes along, takes all that liquidity, and then you get a further move to the downside, which then, lo and behold, takes out the lowest point here. Okay? So that's the reason why I was looking at this level, and that's why I was posting it well in advance in my personal trading plans page in the Discord group. And then finally, let's talk about, obviously, last night's event. Everyone was going crazy for the FOMC. We live stream major new events like the FOMC. We do a bit of live trading as well, so obviously we're talking the guys through. And it was a very simple plan. And this plan started from the morning. And this is the plan that I shared in the morning. So Wednesday's main plan's laid out on last night's stream. So if you guys aren't aware, on Tuesdays I do a educational module or do a chat and chill stream. This Tuesday, funnily enough, was the chat and chill stream, and that's where I mark out my high time frame swing trading plans, and I also mark out my low time frame day trading plans, and basically I share it with the guys. So obviously locally we're still low time frame range bound until this breaks. No need for a directional bias. FOMC this evening, I will go live for it, recap what's going on. Bitcoin, S&P and Dixie all at critical areas in my opinion. And then the final point here is no inside day yesterday. If we get a liquidity grab on one side with a quick reversal, that could be telling. Okay, so I'm teeing my guys up for this. And what do I mean by this? Well, quite simply, we did have an inside day on the day that we're talking about. So this is the day that we're talking about. If we zoom over to the TPO chart, this is the day that we were talking about. So this was yesterday's profile, and this was the previous day profile. And the previous day profile fit within the day before profile. So yesterday was Wednesday, so this was Tuesday's profile. So Tuesday's profile fit within Monday's profile. So therefore, when we get an inside day, if you understand TPO theory, then we can look for a liquidity grab on one side and then run it the opposite direction. So this is what happened in the end. So these are the areas that I marked out, excluding the position, because obviously we took that on stream. But this is all we needed to mark out, and this is what we had on the stream. What we're talking through with the co-pilots is the lows of Tuesday and the highs of Tuesday. And all I was looking for is which one is going to break first. Which one is going to run first. And in the end, the meeting itself, we just did the usual Darth Maul up and down, and then we came down. And then the minute that we took out these lows and we started to retrace, that was your long entry. Okay? So if you did get the long entry, now admittedly, I actually took my long entry back into the VWAP, and I know some of the guys in the group have held on to it, and we've come up last night. We actually came up into a weekly SR level, and there you go. You had a trade, you know. And if you did catch it, depending on where you caught it, you know, regardless, you could have had a 9-hour trade out of that. And as I was talking through in real time, in the trade, is when this spike down did happen, we can see here that we got a load of excess selling down into the lows. And as I was talking through with the team on the stream, is as long as we stay above this excess, you know, we can see all this selling down here, 1.5 million, 900,000, 1.1 million, you know, loads of selling, and then we've got some decent buying coming in as well. Okay, so we've got a big patch of excess down at the bottom of here after it's just played out the inside day trade. Okay, so therefore, as I said to the guys, as long as it stays above that excess, then we can look for higher prices. And lo and behold, we got the higher prices. Okay, so this is the sort of stuff that I share within the Discord. Okay, no, not all my trades win, but when we're live and we're talking through it, it means you guys can actually see what's happening in real time, and I can talk you through what I'm personally doing. Okay, so obviously if you guys want to come and join us for this, then first and foremost, come check out our website, spitfiretraders.com. Access to our free Discord down here, and then obviously if you want to actually get involved with the live streams and get access to my trading plans, then it's going to cost you a whopping $59.95, which, you know, isn't really going to break the bank, is it? Let's be honest. Right, now that's out of the way, let's talk about what could happen. So going back out to the daily, let's throw on the range. So the range is quite simply the highs of the range to the June lows. We've got the deviation, which caught nicely, and now we're hovering up here. So what could happen next? Well, let's throw on a volume profile, like we always do. Volume profile to here, we can see, and this was additional confluence, by the way, on yesterday's trade, is the fact that we came back down into the value area high, which is so far holding us up quite nicely. So from here, what could happen? Well, we've taken out the highs, but we've not had a severe pullback yet. Okay, the weekly level above us here was an acceptable scalp in my opinion, one which I took. TP1 done, stops to break even. If then now we run up, then obviously we've got the range highs around 25k, which every man and his dog is looking at now, which always makes me nervous when everyone's looking at one level, because as we know with Bitcoin, if you've been around for a long time and you've studied what Bitcoin does, if everybody's looking at the same level, it'll either do one of two things. It'll likely either blast straight through that level, or it'll front run it and upset everyone. Okay, so something to be aware of when everyone's watching a level, be cautious. If we do come up and we get a clear swing failure pattern back into the range, then we've got a short trigger. If we don't get this reaction and we continue up, then I'm looking for these outside deviations. Okay, again, if you want to know what this tool is, then you need to come and join us Discord. This is a tool that I created for the members. Okay, if we get no reaction at a deviation, then quite simply we're just coming back up into the old macro range, quite simply. Okay, now we can see here the outside deviation lines up nicely with the value area low of the main range. So what you've got to consider is, if we do get up here without a reaction and we get acceptance back into value, okay, then effectively we're back to trading this old range. Now yes, there are way more SR levels within this because it's a big old range, but that's what we can be looking for. Okay, if we don't get acceptance back into this, then we just continue trading the old range. Okay, so that's to the upside. Now what happens to the downside? Well, quite simply, if we do end up rolling over and we get acceptance back into value, it's not going to be the greatest sign of strength, but we still have the EQ round here along with this consolidation. Okay, so we do have some support below us. If this is lost and we get no reaction here and we continue going down, then we've got the value area low and the point of control. Once again, if you get no reaction, you let it continue to drop. If you do get a reaction, change your market structure, then you've got a long trigger, or add back into your previous longs that you might already be holding. Okay, no reaction there, then coming back down to overall range lows, thus confirming the range with a deviation back into the range, back testing where the deviation broke out, and then you continue trading. Okay? And then if you want the ultimate bear scenario, is obviously you lose this and your lows are not in. It's as simple as that. Okay, so we're just level to level. I'm not overly bullish, I'm not overly bearish. When we approach range highs, I naturally turn slightly bearish because I'm looking for more shorts than longs. It's as simple as that. You know, I won't long into resistance like I won't short into support. Okay? But for now, we're still range bound, so there's no reason to get euphoric. There's no reason to get bearish. There's no reason to get overly bullish. You know, if you are in long trades from lower, great, pay yourself, take some profits. There's a lot of altcoins that I covered on Tuesday's video that are very overextended. So, yeah, pay yourself. Don't be greedy, right? Okay. And obviously, as I say, if you want access to my own trading plans on a daily basis, Monday to Friday, then come join our Discord. All right, gang, that'll do, as you were. Bye-bye.